All right, it's Money Tuesday, and Stewart Welch joins us from the Welch Group this morning, and we're talking about, and you're going to tell us more about this, the new middle-class income tax coming. First of all, good morning.
Good morning.
Tell us about this new income tax.
Well, this is actually a estate planning week across the country, and so it's really a time we encourage people to take a look at what their wills say. If they don't have a will, they should have one. If they do have one, they should review it. And the what's happening is, Sarah, is the estate tax is there's an exemption amount. There's an amount that you can leave to a non-spouse that's not subject to the estate tax. And that amount is dropping from $5 million this year down to $1 million. So if you think of middle class folks, a lot of people that own a home, own a retirement account, and own life insurance are going to have, when you add it all up, it's going to be more than $1 million. And when they die, what's going to happen is they're going to get a tax, and that tax is actually, the rate's going up from 35% to 55%.
Wow.
So if you had like $2 million of life insurance and a house, for your family, and you had a house and a retirement account, you may be facing as much as, say, $500,000 or more in estate taxes, death taxes. And so it's really a time to take a moment and say, let me take a look at my wills and let's see what I can do to begin to solve some of these problems.
And that's one of the first things that you always say is check out your will. It's important, first of all, to have a will and make important decisions about who's going to be a guardian, who's going to be the conservator for minor children. Talk about that for a moment.
So you do. If you don't put this in a will, what happens is the state of Alabama decides all of this for you, and it can be really negative repercussions. So just for example, one quick story. I was reviewing a retirement plan for a client, and it turned out that the beneficiary of the retirement plan was their ex-spouse. It had been like that for 10 years, and they never knew that. And so if they died, they could have a real problem.
Don't want your ex-spouse to be controlling your money.
Not really, not generally.
Okay. All right, quickly, there's some estate tax changes you want to talk about, and you're talking about in terms of reviewing the will that you already have.
You need to review the will you have. One thing that's really prominent right now is they changed, the state of Alabama legislated a model document for power of attorney. Power of attorney is a document that says if you become incompetent, I'm the one that you designate somebody to act on your behalf. And they've changed the law. That became effective this year. Everybody needs to take a look at that. And I think just in general, you need to decide whether there's trust needed for children and a whole array of things. The main thing is to get with your team, whether it's a chartered life underwriter, your CPA, your attorney, your certified financial planner, or your trust officer.
All right, always good to talk to a certified financial planner. You just happen to be one, so if you have any more questions, you can give him a call. Stewart Welch at the Welch Group.
Thank you, Sarah.
Thanks for joining us this morning. All right, best-selling author